following is a paid program. The opinions expressed are not necessarily those of WNBU and Interbanks Media. Welcome to All Things Money with David Blain, a thoughtful and revealing discussion of actionable ideas and effective strategies to help you through the complex world of investing, taxes, and real estate. Now, with All Things Money, here's David Blain.
Hello and welcome to All Things Money. Yes, it's official. The countdown is over. The United States is now number one, and not in a good way. Hello, I'm David Blain, your host for All Things Money. And today, our opening story, we're going to be talking a little bit about the United States corporate tax rate and how we now have officially the highest corporate tax rate in the world. Since Japan cut their rate on April the 1st, 2012, the United States rate is now the number one in the world. There's several tax stories we're going to talk about. It's tax time this year, and a lot of things that we do revolve around taxes, so I thought we'd continue talking about different angles of taxes. So this one, I know a lot of you don't own corporations, but I thought it would be useful to take a look at what's going on in the corporate world with tax rates and how the U.S. continues to fall behind in competitiveness due to this. So welcome to the show today. Our email, if you have any comments or questions, feel free to send us an email, allthingsmoney@dlblain.com. And our phone number, 252-633-0107. And our web address, dlblain.com. That's www.dlblain.com. We welcome all our viewers and listeners on 94.1 FM WNBU, as well as cable TV 10 in New Bern, North Carolina. So back to the story. April 1st, Japan cut its top corporate tax rate to 38.01%, and so now the U.S. has the top corporate tax rate in the world. The Great Britain also cut their corporate tax rate April 1st. It went down from 26 to 24%. January 1st, and the Great Britain's also, in 2013, their rate is going to go down again to 23%. Canada cut its federal corporate rate from 16.5 to 15% in the beginning of this year. So a lot of you don't own corporations, a lot of you own small businesses, and those taxes get passed through to your personal return. But the corporate tax rate with what we call C corporations, a lot of accountants recommend that individuals set up S corporations, which may or may not be a good thing, but a regular C corporation is a tax-paying entity. That means that when they sell goods or services, after they pay their employees and all that, whatever is left, their profit, they pay a corporate tax rate. And with a small business, a subchapter S company or a limited liability company or something like along those lines, a sole proprietorship, company sells stuff, they pay their bills, they pay their employees, and what is left goes to the owner's tax return. So if you are a 100% owner, all that income shows up on your personal tax return, and it's taxed at a personal rate. Well, the corporations, that money is taxed at the corporate rate, and then they can distribute it through dividends to corporate shareholders, who are then taxed again on the dividend income. And dividends are not a deduction for a corporation. So the corporate tax rate is very important. It goes to the overall health of the business climate in a country. It's generally thought that the lower the corporate tax rate, the more it encourages companies to headquarter in the United States. It allows companies to pay their employees more. It allows them to offer lower prices to the consumer. Or even if they don't do those, it allows them to pay larger dividends to the shareholders, which are either individuals or mutual funds with people own in their 401ks or things like that. Corporate taxes, although it is a decent amount of revenue to the Treasury, is not the largest source of revenue to the Treasury. So we look at, in 2012 marks the 21st year in which the corporate tax rate has been above the average of the OECD nations. So we have been not very competitive for many years now. And by the way, a lot of this research comes from the Tax Foundation. taxfoundation.org is a very good research site that I use a lot for tax policy types issues. So the weighted average of the G7 nations is now 32%, or 3% lower than the federal U.S. rate alone, and 7% below the combined rate. Remember, a lot of states also levy a corporate income tax. So you have the federal income tax, and then a lot of states tack on their tax. So it's very easy for a corporation to pay 40% of its revenue, or not its revenue, of its profits in federal and state taxes. In case you're wondering, out of the 34 OECD nations, Ireland has the lowest rate of 12.5%. The Czech Republic, Hungary, Poland, and the Slovak Republic have 19%, and Chile, Greece, Iceland, Slovenia, and Turkey levy a corporate tax of 20%. And once again, these are a lot of these are smaller emerging economies that they're trying to attract corporations to their country, and frankly, they're doing a good job of it. Hungary, Poland, the Slovak Republic, Czech Republic, those areas have started to emerge as technology, great place for technology. There's a lot of cutting-edge programming, software development, things like that going on over there. Not manufacturing, but the actual software development going on over that. So a lot of people point to the, quote, loopholes in the corporate tax load, as these loopholes. It's not really a true indication of the corporate tax rate. I would just say that it drives me crazy when somebody says a loophole. Usually when they mention loophole, they're actually talking about a legitimate tax deduction that is written into the tax code. And I don't really consider that. To me, a loophole is something where there's an unintended benefit that you get, and it's a loophole in the law, meaning an opening in the law that was not intended. And so, for example, a mortgage interest deduction, most people would not call that a loophole. It's an mortgage interest deduction for taxpayers. But for some reason, corporations in the oil and gas industry that are allowed to deduct their production costs, it's called a loophole for some reason. But yet they're the same thing. They're both legitimate tax deductions. A couple of other countries, in case you're wondering, the corporate tax rate, highest corporate tax rate is 39.2% plus any state tax that may be imposed. Some other our neighbor to the south, Mexico, imposed a 30% tax rate. Australia is at 30%. France, 34.4%. Germany, 30.2%. And of course, we already mentioned Japan at 38.01%. So there's some other largely Western developed countries. All right, well, it's time for our first break. When we continue, we'll talk some more about some taxes. So for All Things Money, I'm your host, David Blain.